What's going on? Stock Trader Network pre-market prep YouTube channel. We got options Unchained with CC Lagator coming at you. CC, what's going on?
How's it going? Sorry, I had the STN room, or what are we calling it now? I had that on in the background.
The think tank.
The think tank. I love the
You like that?
rebrand. I love it.
It's what it is. It's a think
Yeah.
tank. We're just thinking. We're thinking out loud. We're seeing what's going on in the market today. We're getting ideas. We're sharing them. We're getting CC's awesome options angle. Something we were just talking about in the STN room. CC, we have a headline that Trump. Let me find it. Where did it go? The headline: moving housing names, lumber names, even shippers, rail names. President Trump pushing to ban institutional buying of homes. According to Bloomberg, that was about 30 or 40 minutes ago. We had the likes of Blackstone, which is a huge institutional buyer, INVH, AMH, a bunch of housing stocks, BLDR, Builders First Source, Open Door also moving, Zillow moving on it, Rocket moving on it, RH moving on it. What do you think about this news? What do you think about some of this price action?
It's interesting because it's to my knowledge, that is a bit of a conspiracy theory on that. I mean, that might be too strong of a word, but that it's not really, that for the most part is not kind of like a big contributor to housing costs right now. I want to say, and when you hear people talk about it, a lot of people mistake Blackstone and BlackRock. I don't know if you
Yeah.
know about that, and it's almost funny.
Yeah.
Like, you want to see what like BlackRock stock did today. So it's interesting because I'm not an expert on this, but I think the argument is that they they own some companies that are in the home rental business, right? And so they have an inventory of homes that are out in the rental market. But how big of a contributor is that? I don't know. It's really good politics on Trump's part, right?
Sure.
Because this is the I think a couple of months ago he sort of made fun of the costs of living situation, which is like massively driving all of US politics for like the last 4 years.
Mm-hmm.
And this is really good politics where you're basically saying, I know it's really hard for millennials to buy a house right now, and so this is really good politics. It'll be interesting to see how it sort of plays out in Washington and all. Like, can you do this? I'm not sure.
Yeah.
So
Yeah.
the reaction, like if you go to like how BX reacted, I mean, how low did it get? It got did it really get down to like 147?
I see 147.5.
Yeah.
Yeah.
And it just bounced $8. So that's sort of my reaction, is it's obviously not good for these stocks. I mean, look at this candle, right? It's not good for these stocks, right? Like, this is bad publicity, I would say, but I'm not an expert enough to react as to like how this will actually play out. But it's an interesting headline, and it kind of, from the market today, this rally in the market today is kind of interesting. And we do the, expected moves for the upcoming week on this show to, each week. We got up, the expected move in the SPX from last week's show to today was 69.60, right? And we got right up there. So we had the move that the options market was pricing. The last couple of days have been great, and I would say especially yesterday was like a really sort of broad-based, great market breadth rally. Today was a little, like, it still is a little bit more mixed, and I think this is largely being powered higher today by some of these Mag 7 stocks. Like Nvidia is higher but off its highs. Amazon is having a pretty great day. Microsoft, I think, is up. Tesla bounced. Like, let's look at Tesla, because that had been under pressure the last week, really. That bounced a little bit today. Yeah, that's a decent bounce, right? So what I would say is the breadth isn't as strong today, And when you get a headline like that, that really kind of affects, the big names in a sector, I think it probably was the cause for us to like slightly roll over here. Now, the question is there something about 6950 that's going to hold this market here and kind of like create a bounce? Because if we were to follow through and go lower, into the close, you're probably looking at something, closer to 6925. But, not expecting any kind of fireworks here.
And you were kind of saying that, like just breadth hasn't been that good today, right?
Yeah, I'm looking at, let me just look at the my little sector cheat sheet. So right now you've got consumer discretionary, which has been having a run the last couple of days, and you've got tech up, and then you've got healthcare up. Pretty much everything else is in the red. So energy's in the red, financials are in the red. Like, isn't like what's JP Morgan doing today? Yeah, JP Morgan's down 2.5%. So, and this has been, again, having a great, a great, like some of these financial names. So the breadth today isn't that strong.
Mm-hmm.
And it wouldn't surprise me if we rolled over a little bit into the close. But who knows? This 6950 is probably a very important level. And, just looking at the options chain for today, yeah, there's nothing significant, like massively significant in open interest at this level, but it's it's a big round number.
All right, so I have your, as always, handy dandy volatility looks here. Can I put that one on the stage? Are we a good time for that?
Let's do it.
Cool.
So this is a segue into kind of the topic and the title of the show, which is we just came out of this holiday trading couple of weeks, right? And not all holiday trading weeks are created equally. And I think that the fact that Christmas and New Year's came pretty much midweek of those weeks really kind of destroyed any chance of like a big move into year end. We had the rally, up until Christmas, and then it kind of gave back into New Year's. And we kind of started the year essentially where we had been for, going back. I'm just going to look at the SPX. So like basically Christmas, like we've rallied back to where we got to on Christmas. And, just even going back like 3 months, we're essentially not that much above the Halloween highs, right? So October, I'm looking at the chart, October 29th, we got up above 6,900 for the first time. We've really struggled at that level. And so what happened over those holidays is, volatility got crushed. And we go into a new year, and I think we're seeing a lot in this first week of beginning of the year positioning. And you're seeing some pockets, I would say, of euphoria. And, certainly like in the storage stocks and things like that, right?
Absolutely.
So
Upside capitulation has been a phrase thrown around that
yes,
I've heard.
and we've been talking about SanDisk and Micron and stuff like that. So I think what ends up happening is a lot of times, if you look at short duration volatility and you go back real quick to, like the expected moves for the next week. Short duration volatility is really low. Like SPX 1.1% move is kind of about as low as you're going to see. It's almost as if it's still pricing in like holiday trading, because it has a hard time recovering from that, right? Like everybody doesn't just come in on this Monday and just start buying options, right? It's sort of like everybody's a little tentative. But if you looked at the VIX the last couple of days, is on this rally, that we've seen over the last couple of days, the VIX has really kind of been hanging in there. And it's had a real hard time going, what is it right now? It's
I see 16 and a half.
I've got 15, right? On the VIX.
Okay.
And it's basically been hanging out at 15 the last couple of days, despite the fact that the SPX has been up like 0.6% the last 2 days. It just kind of has been hanging out there. And so what I would say is volatility kind of across the board is still underpriced as we go into this, this next couple of weeks. And you could argue the next like 2 months, let's say.
Mm-hmm.
And I'm not saying that as like, oh, just run out and buy puts because the market's going down. Although I think it's a great opportunity as we are about to head into what we're about to head into. If you want some protections on some of these longs, certainly I would, if you're playing the SanDisk game and things like that, I would be, really thinking about hedging. And then even, like the NVIDIAs of the world and just your overall portfolio, protection is really cheap here. The flip side of that is the upside is still really cheap here. So if we were to go into, if this euphoria that we've seen in the storage stocks and things keeps moving down, I was watching pre-market prep this morning. It is starting, like you guys, you can almost tell what's happening sort of when you're watching pre-market prep, because the new tickers start arriving in the morning,
Oh
right?
yeah, I know what you're
Yeah.
saying. For
And you're
sure.
like,
You're right.
somebody in the think tank is like, wait, have you guys looked at this thing? This thing looks like it's about to go ballistic, right? And so if you started to see this continue to spread, there's really nothing stopping it to the upside. It's not like the conditions we had for the last 3 months where there was just a ton of options that have been sold at 7,000 in the SPX.
Mm-hmm.
There's nothing really stopping these things from ripping. And, as you can see in like the storage stocks, they can keep going way higher than anybody thinks they can. So therefore, if you're looking at one of these crazy charts and you're saying, oh my God, I missed the move or whatever, or where do I buy this thing? The best advice is to see what happens and see if you can get a little bit of a pullback where it makes sense.
Sure.
But take a little, you can get some pretty cheap shots to the upside in options right now, and none of it is being sort of properly priced because of the overall market. Now, the market itself and the major indices, we are about to get a jobs number on Friday, right? And then next Tuesday, we start basically earnings season with JP Morgan and the other big banks.
Absolutely.
And then you and I were just chatting right before we hopped on. Taiwan Semi reports, I think Thursday of next
Thursday.
week. So
Yeah.
we're right back into it. And you're going to start to see all of these sort of idiosyncratic earnings moves within the market, which again is a great time. Like this week, the time is almost running out to position in these ways. And throw up that second card that I
Okay.
have, the light blue card.
Okay.
And, this is sort of in general, it doesn't apply to every single stock because obviously you're going to have certain names like SanDisk that's already, the vol is already super high. But a lot of these
Right.
names, for 80% of the market, volatility is extremely low as we get into earnings and as we get into, we don't know what's next, right? And what I would say, and there was a question I think earlier that we'll get to, like on SoFi, for instance, of
Okay.
selling puts. I would say be very careful right now of selling covered calls against your stock, right? And I would be very careful about selling, cash secured puts and things. I would be very careful about selling options. I know a covered call is not naked, but it caps your potential gains. The premiums right now just aren't worth it, right? Only in a handful of stocks are they worth it. The SanDisks and the Microns of the world.
Yeah,
Everything else
sure.
is just kind of too cheap right now to be selling options.
Mm-hmm.
So I would actually be looking the other way, which is, how do I position directionally, either to take some moonshots on some of these names and some of these tickers, or if I'm
Okay.
long something and I'm a little worried about earnings, I'm a little worried about like last year's swoon, that started basically in February. It's a great opportunity to look out for some puts or some put spreads in those names where you're like, all right, what would I be worried about, and how can I protect myself so that I don't panic sell the stock on like a 15% move lower?
Can you do an example for us of how
Sure.
you
Like,
would do some of this searching for a name?
well, let's start with, I think Meta came up on one of your shows this morning.
Yeah,
So Meta's, look at this. Let's just look at this chart, right? And Meta reports
let me look.
February 4th, I've got.
Okay.
You can see it in this. So let me zoom in here. So you've got, expected move of 2% for this week, 3% for next week, 4%, and then boom, it's to like 7 and 8% or
Right,
9% after
right.
earnings, right? So it's 9% is essentially the earnings move right now. It'll be less as we get closer to that.
So
But that
what's the date you would guess? Let's see
so,
how.
so I have February 4th
February 4th. Okay,
is
they've
earnings.
reported like the last week of January, first week of February for as long back as they've been reporting. So it's a great little guess just from taking a look at the chart.
Yeah, and look at this. So we're looking at the past earnings moves.
Sure. Yeah,
The
yeah.
last two have been 11%, oddly symmetrical. I
Oh,
think
oh,
this is
strange.
so 11 down 11.3% and up
I
11.3%.
wonder if that was like right at the expected move or something.
Yeah, that's well. That I am assuming that was more, but I'm not sure. Because then you look at the ones before that, it barely moved. Let's just go back just for fun. Back in February of 2024, it moved 20%, right?
Well,
Um,
yeah.
wait, there's something about February. So check
Thinking
this
about
out.
February. Look at
So
this little.
February 1st of 2024, it moved 20% to the upside. February 1st of 2023, it moved 23% to the upside. February 2nd of 2022, it moved 26% to the downside. Let's just keep going.
This is, I
Uh,
mean, we're
that
uncovering.
January, back in COVID, it didn't move much, but that's kind of
So
interesting. There's some
it's
seasonality there.
that's very interesting. I mean, just off top of my head, I mean, it is the Q4 that they're gonna reporting, so maybe it's just kind of like an end of year important. I don't know,
It's
but
all the grandmothers for like Christmas and Hanukkah and all. Like
oh, like an end of season bump,
they were
end
going
of year.
crazy on Facebook with all the photos and stuff.
Probably actually. I mean, that's interesting.
Yeah.
Nice little like random pattern to spot there, though.
So that kind of makes me, so just looking at this chart, right? So 1 year chart, you've had all of this weakness, like into late November, it's bounced, but then it's really kind of going struggling, right? Versus the rest of the Max 7 and all.
Hmm.
Man, you look at this and it's like a 9, let's call it, what do we got here? 9% expected move right now between now and earnings, but after earnings, that catches this whatever. What is that? I don't even remember. Was there a
Whoa.
big move in mid-December? Let's zoom in
Let
on
me
that.
see. Yeah.
I don't remember what that was. December 15th. Maybe somebody in the chat can remember if that's real, if that
Let's see
candle's
how
real.
look. I I see it too. Let me look.
Whatever it was, it failed quickly. Oh, was that when they got rid of the metaverse? Maybe.
Looking.
Kind of interesting though, because it does align. Well, it aligns technically with this, sort of gap low in the middle of this gap and everything. So what I would say here is your worry in, let's say you're long Meta, right? Your worry is something worse than a 9% move. Let's assume you could
Right.
survive a 9% move here. So what I think I would be looking at here is I would be going out in some, into February, let's say, you don't necessarily need to go right after earnings, but let's say I think February 20th is the monthly. And the expected move out to there takes you down to about 591, which is basically these lows around 590. I think I would be looking in something like this where I'm kind of catching somewhere down near that 5, let's call it 600. Let's start at 600 and let's go down to like, let's just price this out live. I have not looked at this.
Okay, sweet.
So let's go 600, 650 put spread. This thing cost you $8 to protect against $42 of like a puke, right?
Right.
And let's look at that like on the 1 year chart. Yeah, like this, I think if I had this, it would make me feel a lot more comfortable going into this earnings, right? And you've got how big of a move would that be? That would be if Facebook went down 15% from here, like into earnings and then out of earnings. So you would be protecting against the last part of that. You would be surviving basically about the first 9% of the move. Now, let's say if you were like, I can't survive a 9% move. So what do I do? Well, let's like move it up a little bit more. So let's go like a 5. So this is like a 625, 575. This starts, the protection kicks in much earlier. And this costs you about 12, $13 to protect against, $37, $38 of that move. And that one's like very realistic that if Meta, puked on earnings, that's a level that makes sense. So anyway, that's how I would be kind of looking at this and kind of positioning. And by the way, like you're saying, why do like a put spread? You could argue just, buy the 600 put, like, what was that? What did that cost? I have to, let me look real quick. 600. So the 600 puts $12. It's a lot of money, right? Whereas I could get much quicker protection, like on something like this, where it's kicking in. Because if you're paying $12 for the 600 put, you're really not getting any protection until the stock goes down below 588. Whereas, a trade like this, it is, it's kicking in much quicker. And I kind of dig this one because if Facebook doesn't, or Meta doesn't go lower on earnings and doesn't puke, it's like $12. I can live with that because the upside potential on this thing is to go back to 800, right? And that's what you're in a stock like this for.
Interesting.
Yeah.
That was a really good one. Did you do you think you covered all the points on the light blue slide? I want to just
Let's
make sure.
go. No. So let's go. What's like give me like one of the sexiest names we've talked. Well, let's talk about like, remember we were talking about Roblox last time?
Yeah, sure. Yeah, I think that's a good one. I know there's people in the community that are still like kind of interested in the trade, so yeah, that'd be a good one.
So that got downgraded this week, I want to say.
There was at least some negative commentary. It might have been a downgrade too, yeah.
Yeah, it's bouncing a little bit today, right?
I think the
So
analyst was concerned with some metric before ahead of the quarter or something like that.
okay. What's
Yeah.
funny is I quizzed my kids on this after we talked about this last
Yeah,
week.
yeah, yeah.
And my son, who's 13, he's like, I don't play it, but his older sister does. She's in high school. And
Yeah.
he was like, but I think everybody kind of plays it like ironically.
Okay.
I didn't delve that much deeper into it, but it's always nice to get like kind of that quick check with the kids on anything, like just anecdotal. And so
Yeah.
I was like, oh, all right, I could see that. I could see why your sort of more ironic older sister plays it with her friends. Whereas he's all into like he's into the Xbox games and
Yeah,
like,
yeah.
NBA 2K and the run around shooting people type stuff.
Yeah.
He's all geeked up about Grand Theft Auto or
Oh,
whatever.
for
Isn't that
sure. I mean,
Take-Two?
yeah, that's Take-Two. Yep.
So I kind of had to explain to him. He was like, they're spending billions of dollars on it. And I was like, is that a good thing? Like, isn't that like a big blockbuster movie where they've potentially overspent? But
Man, this
he's
is
all geeked up on that.
it's one of the most, I mean, the GTAs are always one of the most anticipated games. I'm not the hugest gamer or anything, but I feel like same thing with me. Just like some younger people around me have been getting really excited for GTA 6. I think it's one of the most like anticipated games ever.
Yes. And it's delayed, correct?
It's Yeah, it was delayed. Yeah, which is
Okay.
like I think that always happens with it. But Take Two, that's like the majority of what Take Two trades on is the timeline for GTA and GTA sales.
Yeah. All right. So, but back to Roblox. So now that it's made this move, because I think the thesis here was you all had a guest that thinks they're going to crush earnings, right?
Yeah.
And I would have said when we talked about this last week, I'm like, oh, look for, a potential call spread up to, maybe like the 100 level or the 95 level or something, I think is the last time we talked about it. Now that it's kind of made this move, oh, this is a very interesting level. If you go back here to last February, this is a
Oh
good
yeah.
spot
Wow.
to take a shot, right? So what I would say here, especially because earnings aren't till February 5th, the expected move's 15%. Last quarter, it moved 15.5%. Quarter before that, 10%. A quiet one before that, 11. Let's see if there's anything seasonal about February. Last February or 2 Februarys ago was 10% as well. 3 Februarys ago was 26%. 4 Februarys ago was 26%. And then I don't have that one. So yeah, so this thing could move 20%, right? The expected move's 15%. I think what I would do here on a chart like this is I would not give up my upside, right? So I'm not thinking a call spread anymore because of this recent washout. And so let's look at Feb 6th, just straight calls. And let's see kind of like what level we would go to. So the at the money call is $6, 6.25. Let's, 6.30 right now. So that gets you a break even of 83.30, which was where the stock was right before that downgrade, more or less, right? I think 630 is kind of, it's a lot of money to do in a $76 stock. So let's just move this up a little bit and see if we get rewarded for going a little bit higher. Not too much. Like by the 81 strike, you're still spending almost $5. So this is how I would do this one is I would actually buy something fairly close to the money, like this $6, the 77 call. And if you got a rally into earnings right now, so the expected move for earnings is 15%. But before you get to that week, the expected move is 8%, almost 9%,
Okay.
right? So that's how I would position in a stock like this through options. Is I would just close my eyes and buy this $6 call, and I know I need to get the stock up to above 83 to break even. But I also know that I have this earnings kind of keeping the volatility of the call I own pumped, right?
Sure. Yeah.
Now you could get destroyed on this if Roblox went down to 70 into the earnings. You need a home run at that point to get your money back.
Mm.
But let's say that was the low from that downgrade the other day, and it kind of, there's an argument for that based upon this 1-year chart. So let's say you did get this thing creeping back higher. Where is it going to be right into earnings? It's probably going to be somewhere in that like 81, level or something. That's where you're turning it into a call spread. So you've bought it for $6 and then you get your little rally. Then all of a sudden your calls are trading, let's say $9 or even more. And depending on what vol does into earnings, then that's where I'm looking on this chart and I'm saying, all right, what call do I want to sell now? And I would be looking at, up in these levels, up in the, I mean, you could do 90, you could do 95, somewhere up there. And I'd be looking to sell a call against the $6 we originally spent. And at that point, you might be selling a call at, $3 or something. And so you're getting 10-to-1 risk reward to the upside by legging into that call spread.
I like it. Still digesting a little bit.
What else we got?
We had a couple of tickers. If you're interested, I wanted to
Oh
hit
yeah.
on Ross the Rebel was asking about Circle, CRCL.
Oh my God, is that what a disaster these things. Has that bounced at all? Let's look. Oh my God, look at that chart.
Yeah, it's
So
bounced a little.
so so this is directly this makes sense, right, with the Bitcoin chart. So Bitcoin, it sold off. The euphoria came out of it. All of those IPO names that were associated with this, because what was, there
Like
was
a core weave, are you thinking also?
CoreWeave, Circle, all those
Yeah.
names. Circle's gone down. I actually, I think I'm long this actually, but from like higher, and it's just I tried to play into year end to get some of my money back to 100,
Yeah.
and just couldn't do it. So the way I would look at this is, do they have an earnings coming up February 11th? I guess earnings matters. There's no real history. Let's just look. So 12% move in November on earnings.
Hmm.
So 12% wouldn't even get you to, let's zoom in here. So February 11th, I'm not big enough here. February, well, you can't even see the earnings on this chart. So that just shows you how low volatility has gotten.
Yeah.
So I would, and again, this is one of those stocks where if you see when it went up here, volatility would have been 1,000. And then when you come down into here, volatility is completely gone, because it's like, all right, well, you're no longer going to get a 200-point moves in this stock, right? And now this is going to behave a little bit more like a normal stock. And I think that it may be underpricing the potential for this thing to go back to, 125 or whatever,
Yeah.
but it's properly pricing the fact that this thing isn't going back to 250. You know what I mean?
Yeah.
I mean, what would Bitcoin have to go to? Like, Bitcoin would have to go to 200,000 for that to happen, you would think, right? So let's say Bitcoin did bounce. Let's say these guys, whatever they do with stablecoin or whatever, like the reaction to earnings was nice. I think you can play to 110 in this thing. And the options market isn't pricing and move to 110 until June, right?
Hmm.
So if you got to move higher, or a good reaction on earnings, and let's say Bitcoin, went up to back to 100,000 or something like this thing could easily be 100, certainly, and it could definitely go to 110. So I think I would have the same kind of attitude here with,
Yeah.
like as Roblox, where I don't think I would cap my upside, and I would be looking at calls. So what did I say earnings was?
The
Feb 11th.
second week of February, I think.
Let's go out to Feb 20th, and that's the monthly. And I always go, if I'm going out that far in time, I generally go to the monthly expiration. It's the third Friday. You can see it like
Okay.
on a drop down like this, right?
Yeah.
So first Friday, second Friday, third Friday. The reason for that is just they're always more liquid, especially in a stock like this.
Yeah.
And I'd rather trade liquid stuff, because when I go to get out of it, I want somebody else on the other side, or at least I want Citadel to pretend like they're on the other side, right?
Sure.
So what I would be looking at is, let's just look at calls. This is a very similar setup to what we just looked at.
Yeah.
So the at the money 80 call is 850, right? That gives you a break even at 88.50. I mean, that could happen in a matter of days, right? A break even like that. And
Hmm.
I think I would position something similar to this. Is your risk is this thing just continues to puke. This sideways move was a head fake, and it just goes back to, how low did this get, into the 60s? You're kind of screwed on a trade like this. But if you're like, I think this is roughly the bottom in this stock, and this could go higher, I'd be looking at like an 80 call for about 850. And if you got your move up to 100 or 95 or something into earnings, I would be backing out this chart, and I'd be selling like the 110 call or something. and I'd be looking at this low right here from September, and I would say, you know, at that point, if you were at 95 in this stock, that call you're selling is probably $5-6 or something. And so you're basically into this, you know, like 80-110 call spread for like $2, right? Which is awesome because you can make up to $28 on a trade like that.
Yeah, sure.
And then if it goes lower and it goes down to these lows, you're probably, because you have earnings, it's going to keep volatility inflated. You're getting out of this thing for like $4, you know, before earnings. Because if you carry this into earnings, and you got to move lower and you're down in like 65 into earnings, your chances of it going to 90 are very slim.
Right.
But there's going to be residual value, a lot of residual value in that call because, you know, other people are going to then be buying it. The call you own for 8, they're going to be buying it for 4 just as like a lotto ticket.
Sure.
And so you can kind of get out of a trade like this if you're wrong in the near term for like, you know, set it at like, you know, if this thing goes below 5, I'm probably selling this or 4.5 or something, and just kind of save, you know, because then what you want to do is you want to use that $4 or $5 to potentially position again, but you want to lower all your strikes to give yourself a better shot.
Right. It's a nice setup.
Yeah.
Glad we asked whoever asked about that one. Thanks. Ted Eaton was asking, got a couple more here for you. Ted Eaton was asking about Celsius, CELH.
CELH.
Yeah, you ever look at this one?
Yeah. I think I looked at it. Yeah, I think maybe with you or something recently. So let's look at this thing. I don't know why my chart's not loading. Let me just refresh. Oh, there it did. Right as I refresh.
Right as you refresh, of course.
Exactly. So let's just all wait. Let's all wait another minute. So, all right. So this is one where, oh my God, look at this chart. That's amazing. So you're back into, when is this report? Feb 19th, right? And when you go, the farther you go out, obviously. So we have February 19th. We're pulling this from a feed that, you know, it's like unconfirmed at this point, but it's
for sure.
Yeah, you know.
Good note. Good disclaimer there. Thank you.
Yes. So Feb 19th, and when it's that far out, and there's, what did we just say? Feb 20th was the expiration we just used.
Yeah.
You might want to buy yourself a couple of weeks just in case you're wrong on it being Feb 20th, because if it comes out the next week, your options will have expired the Friday before, which is never a great feeling. So give yourself another week if that 20th isn't written in stone. So in this case, I mean, man, you have this kind of perfect setup where you've had all of this craziness and the stock has rallied. Is like, that looks like a really nice, you know, got back above this gap. The expected move out to there, you can kind of see it on the chart, right? So it takes you to, it's 15%, which takes you to the upside. Let me zoom in. We need it. It takes you to right about here, which is like 59 or 60 to the upside. And then to the downside, that takes you down. It doesn't catch these lows. It's actually where this consolidation happened right after this gap lower, which I have no idea what news that was on. And when was that? November.
Oh, look.
They might be able to fill in the chat. So
Chat's always helpful.
Yeah, so that takes you down to about 43, 44 to the downside. And I assume the question is bullish. This is one where, let's just say it is February 20th expiration. This is one where I'm probably looking at a call spread. And the reason for that, yes. Okay. So this is a 52.5, 60 call spread. And that takes you, let's go up a little bit higher in the, see if we get a 62.5 strike. Nope, that's like the highest strike maybe. All right. But anyway, we've got a 52.5, 60. So that's buying the 52.5 call for 375. The key point of selling the 60 call is you're getting 145 by selling that, right? So that's lowering your entire cost of this trade to 230, right? Now you could play around and like maybe, you know, move this trade up a little bit higher, but like What the options market is telling you is that on earnings, this thing's not, it's not only is it not going back to this October high of 66, 67, but it's probably not going back to like this level of 63. So I would be selling a call up at 60 or maybe 62 and a half if that exists. And I would be capping my upside, but it's worth it because that 60 call is making this trade so much cheaper. And your
Yeah.
break even here is, it's reducing your break even to 54.80. And we're just checking the moves. Man, this thing did move 25%. What did we say this move is? 16%. So yeah, so you could go like a little bit higher. You could go up to the 62 and a half strike or something. And in that case, you're selling that and you're probably getting about $1, but it's worth it because if you do that consistently over time in a stock like this, you are going to be very thankful that you did that because it saves you a lot of money over time. And
All
then
right,
I'm looking at the skew real quick here.
yeah,
So
yeah.
we're 52 and a half. That's 58 vol, and it's 58 vol up there. So there's not much skew there. It's just a straight up call spread where you're buying 80 vol, you're selling 80 vol, you're capping your upside potential, but
Okay.
you're drastically reducing your break even.
Okay, got one more ticker for you, and then a
Mhm.
question, kind of like a general question from MP. Carmen asking, excuse me, Felicia was asking about QBTS.
QV?
Quebec Bravo Tango Sandy. QBTS D Wave.
Oh wow.
You
Let's
ever look
see.
at this one?
Quantum stock, right?
Exciting quantum stocks, yes.
Let's see. I just kind of want to, anytime I don't really know a symbol, I think I might have heard of this. I
I
always,
I like it's probably not the easiest for you, but I like it when you never heard of it because we're getting like raw reaction.
oh, it's got volume. All right. So the first thing I check is like, so look, this thing's trading a lot in the options market right now. So this is volume from today. That's live volume from today. This is open interest. So this thing's good. This thing's trading. All right. QBTS. All right. Bullish, I assume. Very similar to what we just looked at, where if I was looking at this chart and it was down here, like when we looked at Roblox and Circle, I would just be straight up buying a call. Now that it's gone up here, volatility will start to pick up as it goes higher because it's that kind of stock. It is not Microsoft where the higher it goes, the lower the vol goes. It's the opposite in a stock like this. I would be looking at the same thing, which is earnings are it's not till March, right? So you have some time. And I would be looking at the same thing where if I'm playing for continued upside, even before you get to, geez, look at this expected move. So this is a month from now, February 5th expiration, and you have a 20% expected move in this thing. Right? Which takes you right back to this high of about 38, let's call it. So I would be doing the same thing here where I am, let's just go out. Let's take earnings out of the equation because it
Okay.
appears that they're not till March.
Yeah.
But just going out to like February 20th. And what is that? That's not earnings? No, it says March 12th. Well,
I think I looked. I think that's when they report. Yeah.
okay. So
Yeah.
February 20th, let's do bullish and let's do a call spread. And then let's look at this. And what level did I just say is 60 or 38 or whatever? So this one is kind of interesting. So this is buying the 31 call, which is at the money. And you're buying that for $4.25. You're selling the 39 call at almost $2, right? So this one I can already, without even looking, I can tell you there's going to be skew here. So February 20th, 31 call is 100 vol, and the 39 call is 102. So just a little bit of skew, but typically that would be 90, in a normal stock, 90 vol up there. So I really like a trade that looks a little bit like this. Let's just see it if we go 30 to 40. This is, your break even is 33 in this stock, which seems like nothing. and you're getting rewarded for selling that 40 call. You're still getting $1.75. So this is a 30-40 call spread with a break even at 33 in the stock. I kind of like that one.
Okay, awesome. Thanks, CC. And
Yeah.
then MP had a question here for you. Any trade ideas on SPX put spreads?
SPX. Let's look at it. What has it been doing since we've been talking? Oh, look at us. So wait, let me check my. Oh, I have a kind of an insane trade right now.
Okay,
Let's
yeah.
go to that real quick. So this morning, I kind of didn't like the open. It got really volatile this morning, right? That
Yeah,
open.
I don't think Dennis
And
liked the open this morning either.
it just didn't sit right with me.
I hear you.
And
Yeah.
so when at some point in the open, probably pretty close to unchanged or whatever, I did this cheeky trade where it's a butterfly down to 6,900 that starts at 69.25, right? I
Okay.
paid like $1 for it that
Okay.
I can make up to $24 if this thing goes back. If this thing got down near 69.25, I'm probably going to take like 10 of them, or not 10 of them. I have 10 of them. I would probably take 7 of them off and let the other 3 ride or something like that. But
Happily, very happily.
so this is degenerate 0 DTE where I'm like, I'm gonna do something that I do not recommend stuff like this. But sometimes it was just the last couple of days and that rally. And I'm not bearish overall on the market, but it just seemed like an interesting trade where, we kind of hit this new high and like maybe we return today, especially with like
Yeah.
the jobs number coming up. I could be completely wrong. We just pin at 69.50, but my payout is 20 to 1 if I'm,
Right.
if I get it potential. And I wouldn't wait for that 20 to 1. I would take it off like
Yeah.
in stages or whatever, like a big chunk. If we hit 69.25, even as we're talking, I would probably take some off. How low did we? This is the afternoon low. So anyway, I'll keep my eye on this. But anyway, in general, ask a time frame on this, because SPX I normally trade short duration because it's cash settled. The farther I go out, like I just kind of do SPY and Q. I don't know if that makes any sense, but like if I'm going out like a month or something, I generally do SPY and Q. That's not totally true. I kind of split half and half. But if I'm doing anything for like obviously today, but anything for the rest of the week, I generally do SPX because I don't want to be forced to close it at a bad price, like as it's expiring. I'd rather it just go into cash like SPX does. Do we have a time frame?
No, keep running.
Okay.
Yep.
So what I would do, let's use SPX because it's just the big round numbers we talk about the most. So obviously the big concern on any sort of kind of late Jan swoon into Feb or whatever, which is possible, like if this were to roll over, your first stop is clearly 65.50. And the options market isn't pricing that till April. And this is sort of what I'm talking about. So that's a 6% move. Let's call it, like, when is the options market? The options market is pricing a 5% move, not till April. And this is sort of what I was getting at the beginning of the show. It's just everything's just too underpriced, right? So what I would be doing is I would be going out to, February, March. I could even argue February. That's a month and a half from now to play for a 5% move down. Seems not that ridiculous. These are going to be massive numbers because they're SPX. So let's go to, what level did I say was 67.50. Let's go down to 6,700. Let's see what this thing looks like. So I should have done SPY. Those are huge numbers. So this is basically risking 6 to make 18. I'll turn it into small numbers for everybody. And your break even on this is basically just below 6,900. which, as I just mentioned, could happen in like a day, right? On like a decent, 0.5%
Yeah,
to, a 0.75% move.
for sure.
So like you look at this, you've got this for a month and a half, and your break even is where we were yesterday or 2 days ago, right? So your break even is where we were 2 days ago. And let's just do it for SPY and Q too. And you're gonna have more consumer friendly numbers on this. So February, what did I say? February 20th. And let's do a put spread. I'm just clicking bearish put spread. This thing is $6, a break even of 686. And let's go wider. Let's have a ball here. So let's do a 690, 660 put spread. All right. And this goes out to February. So, and now I'm going to zoom in. So this is your break even, and it's 684. And we were 684. We were below 684. We got as low as 679 on January 5th, which was 2 days ago, right? So doing a trade like this, your break evens are where we were earlier this week or last week in some cases. You're going out to February. You could go out to March or something like that. Everything's so cheap. I would be doing very tight at the money type trades like this. And in this case, you're risking 6 to make 23, right? If that makes sense. And I think you could kind of throw a dart here. If you were looking for like longer term protection on like your entire portfolio, I would go farther out. I would go out to April. And in that case, this one, let's go down to like, what's this level? 60. Let's go to like 60.25 or something like that. I'm going to do buying a 675 put and selling a 625 put. And that has a break even at 667. And you protect yourself down to 625 in the SPY. And it costs you 7.5 to make up to 42.5. So this is
Interesting.
this one's like great start of the year portfolio protection.
Sure.
Where it's like you put on a trade like this, and this is going to keep you so much less nervous if you got to move like what we saw in November, or even what we just saw right into New Year's, right?
Mm-hmm.
Just a couple of percentage points takes you to where this trade kicks in. And so I like portfolio protection. I would go farther out, like April or whatever, and I would be looking at like $50 or $75 wide put spreads like this.
Mm-hmm.
Maybe start them a little bit out of the money the farther you go out, if you're thinking it's as protection. If you're like, I'm bearish on the beginning of the year, and like what's this how we started out of the gates, I would be going to what we said in like February or mid-February or even early February, and I would be doing something much tighter and closer to the money, where I'm buying like a 690 put and I'm selling something down below 670 or 665 or 660. The risk reward on these are pretty great right now.
We've had a really nice interaction with Options AI today. Like some days, CC, when we're on, we're kind of like using the slides and we're kind of just being talking heads. But today, you are really giving us a really nice tour of your platform, Options AI, where you are one of the co-founders.
Do you want to see the AI real quick?
Sure. Yeah.
So on my cheeky SPX trade, let's see what it says. So it expires today. Price is near short strike, blah, blah, blah. So it's giving you like sort of the rundown on this trade. And
Okay,
then
cool.
I can set up price alerts. I can automate an exit. I can like manage orders and everything like that.
Sweet.
You can keep talking to it, and you can keep asking questions about it. So
Oh, nice.
yeah, so it gives you a little bit like, we tell this how to speak.
Right.
We don't have 100% control over it. Like I'm sure you could ask it out on a date and it might eventually say yes. But like, it's pretty cool because it's trying to turn all of this, the entire goal of this entire platform is to try to turn these types of trades into plain English and plain visuals. Like a normal options trade, they do like the the payout diagrams, which don't make any sense. So we've built this as like options for equity traders. It's like, I want to see where I make money on this chart. You know what I mean? So yeah.
Love it. Love it. Love the platform. Love having you explore around it. Like I don't even have to do anything. You just do it for me. That's always really nice. Options Unchained every Wednesday, 1:30 p.m. 1:30 to it's scheduled for 2. We went a little overtime today. Thanks for the
Oh yeah.
overtime, CC. And you appear quite often on Fridays in the STN room. You will be on also at 1:30 on this Friday, correct?
Yes. Do you have to change the STN? Do you have to change the acronym?
We'll figure out what to do here. I mean, maybe it's just like a tongue-in-cheek
Wait,
think tank.
STTT.
STT, the think tank. We'll have to run this by Triple D.
Yes. I like it.
Moon Patrol says thank you, CC. Great session as
Yeah.
always. I agree, CC. Thanks for sticking around a little bit longer today, and we'll see you Friday.
Excellent. See you, everybody.